Welcome to the Sellernomics podcast. In today's episode, we'll be featuring one of the many great tools and software available to Amazon sellers to help you grow your FBA business. A special thank you to our sponsor, GETIDA, the global leader in FBA auditing and reimbursements. Get $400 in free FBA reimbursements at getida.com/Sellernomics. Now it's time to show us what you got with your hosts, Rob Stanley and Lisa Kinski.
Hey everybody, welcome to today's episode of Sellernomics. Show us what you've got. My name is Lisa Kinski. I'm here with my co-host Rob Stanley, and we have with us today a very exciting guest. He's, depending on the release, this will be your first or second time seeing him, but he is a friend of the show, return visitor, Nachman with ConnectBooks, and we are talking about how to take control of your Amazon finances, and we're going to get a demo of the ConnectBooks software and how it integrates with QuickBooks and all the wonderful bookkeeping things for Amazon business owners.
Looking forward to this.
Absolutely. Nachman, how are you?
Doing great. How are you, Lisa?
Doing very well, dear. Thank you. I forget to ask, are you up in Jersey too?
We're borderline Jersey.
Borderline Jersey. Okay. It looks like
we're upstate New York, which borders Jersey.
Okay. Looks like gorgeous weather. Yesterday we were supposed to, and again today. So I'm jealous. It looks beautiful outside. But let's go ahead and jump straight into it, Nachman. So like we said, we're going to talk about how to take control of your Amazon finances with ConnectBooks. We're just going to jump straight into the demo. So we're going to add you to the stream here, and the show is yours. Take it away.
All right. Thank you so much, Lisa. Thank you so much, Rob. And we'll get straight into this. So just give a little overview of what ConnectBooks is. ConnectBooks is an accounting application that integrates to Amazon and connects it directly to QuickBooks. The main focus of our software and kind of where we differ is we are an accounting software that focuses on clarity. At the end of the day, all we're doing is we're pulling your data from Amazon and we're bringing it to QuickBooks. But the difference is the way we do it and how we do it, because otherwise anybody could just dump data into QuickBooks. So our main focus is clarity, and we're going to show you how by using our methods, it will save you 75% of your bookkeeping time throughout the month, and plus you will have clear clarity and understand, and you'll visually be able to see really what's going on in your business. So as you see my screen right over here, this is the ConnectBooks dashboard. I'm not going to jump too much on this. I want to first jump in more of our export side and how the data flows into QuickBooks. So I'm going to go over here to my QuickBooks export page, and I have something called Amazon Sample. On my Amazon Sample page, you can see I have a list of disbursement. This is some old dummy account that we put in. And this kind of shows over here, you see, let's say the seller had a disbursement in August and it finished in September, and the total amount was $459. Now, $459 does not mean that was the amount of sales. $459 means that was the amount that came into the bank. Now, what we do is, as an accounting software, there's two different APIs that we pull from Amazon. One is how much money came actually into your bank, and then the second one is all the details of that. And what we do is, once we get all the details of the API, all the details, we actually match it up to this amount. So even if we're off with a penny, we know that it doesn't match up, and the system re-reconciles it and make sure it gets it right. So that's how we have like a double check balances to make sure that we account for every single penny, and it's also accurate. So once the disbursement closes out, what we will do is we will take this whole thing and send it into QuickBooks. And I'm going to jump a second onto my QuickBooks. Now, just a disclaimer, I'm just using the desktop just because it's easier, but we do it for QuickBooks Online as well. And we have a zero integration, which will be coming in 2 or 3 months. But the QuickBooks Online, it's going to be exactly the same way. So I have a customer here called SKU-based. And as you see, we have a payment here of $459. So as you see, we have invoices and credit memos. So the invoices are all the sales, and you see over here, I have an invoice. I sold a Ring Alarm 5-piece kit, $207. We got the commission, all the fees broken out. We can do a summary, break it out. We can set this up however you need. And then, we kind of move on to the next product. So the idea is that we bring in the sales, we minus off all the fees. So let's say, for example, you're doing $100,000 in sales, and let's say in a particular 2-week time frame, and then Amazon takes off $50,000 in fees, and then Amazon gives you $50,000. So that's what we're doing. We're bringing the sales minus the fees, and then after all that, we bring in a payment, which that will get deposited into your Chase bank account in QuickBooks, and that will match exactly to how much money Amazon gave you. So if you see on this part, this is very neat and very clean. You have the sales, you have all the fees, and then you have the payment. Now, I've seen a lot of other people like using some sort of software that would, let's say, just bring in the sales, and then they would spend 3 days to actually go through all the Amazon fees, try to import it manually, and then they're still trying to match up to this payment amount, which is literally it's a couple of days of work. So in this case, we completely automate the process. We bring in the sales, minus the fees, matches the bank account, and then comes in the payment. And it's also easy to see. As you see, my customer balance is always zero. Like, for example, I always tell people, if you want to make sure it's working properly, if you're doubting anything, as long as you see a payment, which that matches the bank account, and the customer balance is zero, let me say everything is in there. And it's not like, something can go wrong on that end. So it's a kind of, if you're looking to make sure the stuff are properly and everything is accounted for, this is what we do. And this is kind of how we bring in the data and stuff like that. If you're using any other software and you see that there's a balance, like let's say there's 100,000 in sales, and you see you have a balance of, let's say, $100,000, that's not good. Even if the payment is in QuickBooks, you have to account for all the fees, and you should be cleaning up the balance. Meaning, after the 2-week period ends, you should not be showing in your books that Amazon owes you money. It should be clean out. Now, there could sometimes be that Amazon has withheld something called reserve funds. Like sometimes if you're a new seller or you open an account in last year, and let's say all of a sudden you're doing $500,000, they might pull back 100,000. But that needs to match back to the penny. We don't leave it here as an open balance. We have a different method how we account for it, and we account for it exactly. But if that's the only open balance you have, that should match back to the settlement report. But if you're piling up every month full of more and more money, then you kind of know something is out of place, and that's kind of what you want to look at. So that's kind of one major highlight about our software. Now, I'm going to jump into the next major highlight of our software. Next major highlight is tracking cost of goods sold. So what ends up happening is you want to make sure that you have the proper cost of every single product. Now, for the last 2 years, the market has been volatile. The market has been crazy and wild. And it's been so wild from many different aspects. For example, there was products that, let's say you purchased $20, they went up to 30, now they went back down to 25 or went back down to 20. But then there's also other problems with containers. It's I don't get this, but I'm trying to sympathize with everybody. But last year, in this time, or maybe a little before, the containers were $20,000, and this week they're $2,100. So I don't think these companies are operating at a loss, but somehow they're able to still bring containers from China to New York for $2,100. So it's I don't know about that, but at the end of the day, you want to make sure that your cost is in QuickBooks properly. Plus, you also want to make sure that you're accounting for that shipping cost. And that can be a big, big difference. And, I've seen so many different stories and so many different times where people are just not making sure stuff are accurate, and they're just not making sure about this. And they're kind of like, just like, going, like just all over the place. And then all of a sudden stuff are not making sense, and then kind of figure out, what's going on. So what is my solution? So my solution is we like to track inventory in QuickBooks. Now, why do we like to track inventory in QuickBooks? The answer is that every time you buy a product, you have a bill, you enter the bill in QuickBooks. So what happens is QuickBooks knows, okay, now I purchased 100 units at $1 a piece. And then when you have a new invoice, you enter, let's say the price went up to 101. And let's say you only bought 50 pieces. So QuickBooks knows that you have now 101 units at $50 a piece. So what ends up happening is if you track all that information in QuickBooks, QuickBooks would constantly track your cost of goods sold, and it'll always be accurate. Now, the problem is inventory is like what I say is like a cup of juice. You can't drink a cup of juice if it's empty, right? You got to first pour in the juice, and then you can drink it. And the same is with inventory. You have to first purchase it, and then you can actually sell it. It's a common problem. A lot of times people try to do sales in their books, and they forget to put in the inventory. Sometimes people don't put in the inventory. So what I'm saying is that when you purchase, you create a bill in QuickBooks, and then you itemize it. However, when the product sells, you have to take it out of inventory, right? So in ConnectBooks, we have our product page, and on our product page is where you can go over here and we'll give you a list of products, and you'll have over here every single Amazon SKU, and then you can take the SKU and assign it to a QuickBooks ID. So for example, this product, I can select QuickBooks, and then over here I can type, whatever product will come up. Let's say this is phone test, whatever the product is. And then whenever this SKU sells, ConnectBooks will take out one phone test item out of inventory. So that's how your inventory is properly updated. So just to recap, the way inventory works is when you purchase, that's when inventory increases, and when you sell, that's when the inventory decreases. As a quick tip, something not to do is what I've seen a lot of people do, is that when they send a shipment to Amazon, they take it off, they create an invoice. Why? Because they're saying, oh, it's not anymore in my inventory, it's not in my warehouse anymore, it's by Amazon. Truth is, it might not be in your possession, you might not be in control physically because it's not your warehouse, but it's still yours. You cannot take it off your books till the products don't sell. And that kind of messes up because you're basically recording sales even before the product actually sold, and you're like determining what the profitability is when you never even know what the profitability is. There's so much happening in Amazon. It's such a fast moving space that there's no way to know what a product is going to sell for tomorrow. So you cannot take the inventory off your books till it sells. So once it's personally closed and Amazon already shipped out the goods, that's when the product sells, and that's when ConnectBooks will bring in the sales and will attach the proper product to it. So and we would walk you through on the onboarding. This is not something we expect you to figure out on your own. The way it works is that we give you an onboarding call. So if this seems a little bit too overwhelming, don't get afraid of that. We will walk you through on this and make sure everything works properly. So over here, you get the option to choose a product in QuickBooks. And then we also have options for like bundles or kits. I don't want to get too much into it, but like if you have any kitting or bundling, we deal with that as well. So once this information, gets entered over here, that's when the data flows back into QuickBooks, and that's how we know which product to deduct. Now, if you're doing it in QuickBooks, you will also be itemizing your QuickBooks. You'll be entering your bills on an item level, and that's how what ends up happening is you can track your proper cost in QuickBooks and know what the cost of every single product is. Now, I want to jump into a different feature, and then I'll get back a second to tracking in QuickBooks, is we have our landed cost feature. So this feature is something that I'm really excited about. We spent a lot of time building this out. And what this feature does, it kind of, it takes the shipping cost and it splits it per item. So as I was saying that, one of the things we want to do is make sure we have accurate cost. So let's say I'm bringing in let's say I have in a container an iPhone and an office chair. An iPhone costs like $1,000 and an office chair can cost $30. But to import an office chair from China could cost you, let's say, $50, and to import an iPhone from China could cost you $2. So now let's say in the container there's 1,000, let's say there's 100 iPhones and 100 office chairs. So and let's say the container costs $5,000 to import after duties, chassis, and all those fees. So now I have $5,000 of shipping that I want to split, and I want to take that shipping and allocate it to the product. So I can't just say that let's do 50-50 because the iPhone takes up very little space in the container versus the office is probably taking up the most. So the way to do it is to understand how much space each product takes up in the container and then split it among that, right? So we call that the cubic-based measurement, which is the CBM. So most people know a 40 high cubic container is like around 65 CBM, 66, somewhere there. And what you do is you take each product, you see how much space it takes up, you take that and you split it. Let's say, for example, so let's say the office chairs in terms of space, let's say it takes up 97% of the container, then 97% of the shipping gets applied to that product, and then 3% goes to the iPhone. We don't care what stuff costs. It's about the space because that's what you're paying for and that's how the bills go. So the problem is that's a very tedious process. Why? Because every time I have a bill and so if let's say every container is only one product, your private label, and you're just bringing in one product, then it's very easy. But most people have 7 or 8 different products in one container, and so what you have to do is you have to like know what was in the container, then get like a spreadsheet and lay out all the 7-8 items, figure out the dimensions of each product, then times it by the quantity to know how much it's taken from the container, and then split it among the shipping expenses, which is I mean, we do bookkeeping here in-house. It took us at least a half hour each time we had to do an allocation. It was tedious and nerve-wracking. Nobody liked doing it. So the way we did it here is we have an automation part in ConnectBooks. So I'll just show you briefly how this automation works. So what we do is we have a settings tab. So first we would connect to QuickBooks, and then under settings tabs we have a vendor. So under the vendor we will list which is a manufacturing vendor, which is a freight vendor. So that's how ConnectBooks knows how to pull the bills. Then on the product tab is you would assign a tariff rate. So that's another thing they also need to split is a tariff. So sometimes, for example, the certain products have the 25% tariffs, and then certain ones are like only a few percent. So you have to know what the tariff rate is. And then here's where you put in the CBM per product. So you put in the length, width, and height, and you put this in. Now, once all that's in, what we do is we tell you when you enter bills in QuickBooks, in the memo, you should put in a container number. So the idea is we're working per container. So when you put in, now in QuickBooks, when I can enter a bill, right? If I go to my vendors, so I have a manufacturing bill, right? Now, this is the reference number of the bill. And then here is the memo. Now, in QuickBooks Online, it would be somewhere here in the bottom. There would be like a memo section. But basically, you find where it says memo. Now, once in the memo, you would put in the container number. And then when you get the bills from your vendor, when you get the bills from the shipping vendors, let's say the ocean freight or the trucking and all that, you always make sure in the memo to put in which container that bill belongs to. And then what you can do is over here is very cool. You just type in, let's say, container 857, and you type in 857. Now you can also go here, select like a certain date you want to see from April, or you could select which vendors you want to see. But I like to do by container number because that's how, if let's say, sometimes the bill from the manufacturing could come into January, and let's say the container arrives, let's say you enter in January, the container arrives that month, but then there can be trucking bills or other bills that can take some time to come in. So maybe you want to wait a month or two till you do it, but you want to kind of like you want to make sure that when you're filtering by container numbers, you get all the bills for that container. And then once you have that, what you do is you check this, and then you do review. And then what we do is we take this 25,000 and we allocate it. So you see over here, we got 3 products, Galaxy, iPhone, and Ring Alarm. And we put in the freight cost. So here was only 14 cents, here was $18, and here was $31. And this is the tariff that gets applied accordingly, and this is your new cost. And then we have this little cool feature, which a picture of a container, and it shows you how much space each product is taking up. So in this sense, we will allocate all this, and then we will send it back to QuickBooks, and you'll have the proper things in QuickBooks. Now, once it's allocated, we don't want to allocate it twice. So you have something called updated bills, which this is already allocated. So, I mean, that's to delete it. But, if I go in here, I see that this was something was previously allocated, and this is how I took it up. Now, in QuickBooks, what happens is, this is how the bill looks previously, right? So we have a Galaxy, iPhone, and Ring Alarm. Now, let me show you a different bill. So over here, you see the price went up. The price is $131. This price is $39. And what we do is on the expense side, we take it out. So we're showing you over here that we have 14,000, we have 30,000, and here we take it at ConnectBooks Freight, ConnectBooks Tariff. These are just separate asset clearing accounts that were created. And we can help you set this up too. It's not a big deal. It takes just 2 minutes. And this is how we basically reverse the expenses that you made or take it out of the asset account, and then we allocate it to inventory. So now QuickBooks knows that as of 11/1, I bought, let's say, 500 iPhones at $39.96. And then as it sells, QuickBooks will be recording the proper cost of goods sold. So now we spoke about in terms of understanding and how to make sure your cost of goods sold is accurate. And we also spoke before about automating the accounting. Now let's jump into reports. So if you want to see reporting in QuickBooks, like as a whole, you could just go to reports. You run like you could run like a regular profit and loss in QuickBooks, and you can do whatever you want. That's simple. But the question is, what happens when you want to understand more on a product level? So if you want to understand more what's happening on a product level, that's where you would come to ConnectBooks and you would run the report over here. Now, what's very cool about this report, and what I like a lot about this is, and this you're not going to find in any other software out there. And why I'm saying any other software, because we are the only software that integrates with QuickBooks and plus does reporting. And what you see over here is the cost of every single product. That's going to come from QuickBooks. Now, why is this so important? So if you're running 5 or 10 products, you might have it easy. But once you're running 100 to 200 products and you have somebody doing your bookkeeping, one of the things you're going to ask for your bookkeeper is give me a report how much money to make in a product level. And they're always behind. Find me a bookkeeper that's not behind. So what ends up happening is, you want to have like an automated system. Now with ConnectBooks, it solves that solution. Besides that, it makes the bookkeeper's life easier and enables them to do it. It also makes the boss's life easier because you have automated reports at your fingertips. And this is also mobile friendly. You can do this on your phone. So what happens is, if you go on the product, you'll have the quantity, the gross amount. So let's say I would, jump down, have the gross sales, and let's say you want to see a breakdown of merchant fees. That's going to be commission, fulfillment fees, and then you'll have the ad spend. This is just a dummy account, but the ad spend will come in per product, meaning it would be per SKU. You have the display ads, the video ads, and the regular ads. Other fees would be like storage fees, and then we would have cost. So the cost of goods sold would be coming from QuickBooks. So when the cost of goods sold comes from QuickBooks, basically, and now let's backstep a second. If you're going to set up your inventory in QuickBooks properly, and you're going to be using the landed cost feature to allocate your cost to the product, so basically your cost in QuickBooks is going to be 100% accurate. So then what happens is ConnectBooks will pull the cost from QuickBooks. So basically, let's say the cost changes. You don't have to do anything. It's automatically updated because every time the bookkeeper runs a sync, the stuff flow properly back over. So your work, the most reporting tools that happens is, meaning connecting to Amazon and fetching the data once an hour. There's a lot of other tools that do that, but none of the tools connect to QuickBooks to fetch the cost. And if you want to have something completely automated where you don't have to be on top of the bookkeeper, hey, I need a report, it's the end of the month, you could just come in here and every single time it's always up to date. All the bookkeeper has to do is just enter the bills in QuickBooks. And as long as they're constantly entering bills every single day, and they use the landed cost feature and all that, everything is going to be completely updated and it's going to work properly.
Another quick question for you regarding like the quantity cost, like per item cost. So if I order 1,000 of them, and let's say the shipping's a bit lower at that time, and it assigns $33 per unit based on what you just showed us, but let's say I haven't quite sold out yet, I order another 1,000, they come in, I send them to Amazon's warehouse. Is it going to do a blended cost, or is it going to know, hey, for these last 100 that sell, it's still at this price, but within the next 1,000 that start selling, it's at $34 because the shipping price went up or something like that?
Yeah, perfect question. So it's a little bit complicated to answer, but I'll do my best. So first thing is QuickBooks Online runs on FIFO. QuickBooks Desktop runs an average. Difference between FIFO and average is first in, first out. Average is an average cost. Now, one misconception a lot of people have about average cost, which I want to explain. So let's say in January, I buy 100 units at $1, and I sell all the units in January. So what happens is at that point, and then let's say in February, I buy another 100 units at $2, and in February, I sell again. Let's say I don't sell it. When I run a P&L for January, my cost should not be an average between $1 and $2, meaning $1.50. My cost is $1. Why? Because all the inventory that I bought in January was sold in January, so there's no average cost. When does average cost kick in? Let's say I bought in January 100 units, and I only sold 80. Now February 1st, I have 20 units on hand from January, and then I have another 100 units that I'm buying at $2. So now I have 120 units on hand. 100 I purchased at $2, and 20 units I purchased at $1. And my total inventory value is 20 plus 200, which is 220. So now the question is, February 1st, when you sell one unit, what is the cost? Then it depends. If you're running like on a FIFO method, which says first in, first out, then we'll say your cost is $1. If you're running an average, we'll say your average cost is $1.83. Now, but one thing not to mistake, the average cost does not change for January. January's average cost always stays $1 because we clearly know that those 80 units cost at $1. So the average cost now in QuickBooks Desktop will be running an average. So what gets very complicated is, let's say, now we only spoke in a very simple case where you buy 100 at $1 and at $2, but imagine now adding in shipping cost and And imagine as that evolves, that change. And imagine, let's say in February, you only sell 50 pieces, but now you're bringing in another 100 units, and now you have new landed costs with the cost changes constantly. To calculate that properly is almost impossible. And unless you don't have a good, strong accounting system, you're not really going to know what's going on. And the best way to do that is, you do it in QuickBooks. Now, sometimes, and the benefit with ConnectBooks is that it helps you get all that in the right spot, and your reports are completely automated. And then we have a lot of cool features here. The time is not going to allow to go on this, but like we have something templates that you can, configure the reports. You can go to the column chooser. Let's say you want to pull out any fee over here on the column chooser. You can take any column here. Let's say, I'll just show you very quickly. Let's say you pull out commission. So you want to see it just on a singular item. So you see now it popped in. I can drag it and drop it here. And you can do any filter you want on any column or any of these filters, and then you could just save it as a template so you don't have to reconfigure it. We are having a new report coming out in the next week, which will be comparison reports, which you'll be able to take every item and compare it the sales and all the fees with the ad spend, and we'll also have the ARCOs on it. You'll be able to do it by day, week, month. So let's say you want to see this product this month versus last month, it'll be just a click of a button. It's a beautiful, gorgeous report. We've been working this for over a year, and it's finally coming to light. And then we also have another thing about the reporting is, as we discussed before, regarding average cost. So it's also a very good feature that we have. What happens when the cost changes? So let's say, as we said before, let's say in January it's $1, and in February it's $2. So in QuickBooks, the sales for January shows $1, and then in February it will show us $2. But what is ConnectBooks going to do? So the answer is ConnectBooks has two options. Under our customized report feature, we have something called latest cost or average cost. So the latest cost is if you want to run the report and see, what it costs you now. So you'll see the latest cost, which would be $2 applied to the period. If you want to see the average cost, you would switch this to the average cost. And then, when you run the report in ConnectBooks, so January it will show you $1, and for February it will show you $2. And we have built that special functionality for this to be able to kind of pull all this history from QuickBooks, because you have to remember, we have to save when the cost changes and all that. And we log all that data and we pull it all in there from QuickBooks. So that's just in a nutshell. There's still a lot more to talk, and there's still a lot more to go, but I don't think the time lets us go too much further. So if anybody really wants to jump on, just feel free to reach out to our website, comment on our website, schedule a demo, and we'll help you and walk you through the process and go from there.
Yeah, I think that's a great place to leave off, where there's enough leaving them wanting more. So if you guys are looking for more information on ConnectBooks, you can go to connectbooks.com. And then Nachman, we still have that special offer. Did you want to speak on that for our listeners?
Yes, so we're running a special offer for all GETIDA listeners. You're getting 20% off for the first 3 months, and the code is GETIDA. Just so you know, it's limited to the first 25 signups, so you better hurry and sign up.
And that's 20% off the first 3 months, and that's in addition to the first 30-day free trial.
What happens is when you come to ConnectBooks, you can request a demo, and then we'll give you also a free onboarding with a one-on-one bookkeeper, which, is totally middle video if it gets very overwhelming or you have a lot of questions. And also our background is in accounting. So like if we see you doing something wrong, we can point it out and tell you, hey, this is not how it should be done. Not that we're going to, we'll just walk you through the process and make sure that you clearly understand how the data is supposed to be in QuickBooks and how it should properly flow, so you completely understand it. And so you get your 30-day free trial. In the 30 days, you should have your onboarding call. And then on top of that, you'll have 3 months, which you get 20% off. It's a month-to-month agreement, meaning cancel anytime. So what I always tell people, take ConnectBooks for a test drive and see it for yourself.
That's
Perfect.
awesome.
We love that. Nachman, thank you so much. It's you can definitely already just from that demo see how important it is to have a service like yours and an experienced team, because QuickBooks itself is a beast. And then having your service to kind of help sellers to navigate that and organize all of their data is really helpful and impressive. So thank you.
You're welcome.
Appreciate it.
Rob, anything before we sign off?
No, yeah. Head on over to connectbooks.com, sign up for that free demo, and try them out. I mean, you got 30 free days to try them out and talk with them. I mean, accounting is such an important thing. And absolutely great demo. Appreciate you really breaking it down. I know there's a lot more we didn't get a chance to go into. That's why people need to sign up and get that demo going with you guys so they can learn more about what ConnectBooks can do for them. It's a vital to the business. Nachman, thanks for coming on. We do appreciate you being on the Sellernomics podcast and showing us what you got.
All right. Thank you so much, Rob. And thanks, Lisa. And hope to be back soon.
Wonderful. Thank you. And thank you everybody who tuned in. We'll see you on the next one.
Thanks for joining us this week on the Sellernomics podcast. Special thanks to our sponsor, GETIDA. Did you know that Amazon probably owes you money for FBA reimbursements? Get $400 in free FBA reimbursements at GETIDA.com/Sellernomics. Be sure to join us again next week for more great tips on how to grow your business. And thanks again for listening.